Aloha, and thank you for joining me for Java. This is for the week of February 19th, 2024. Today is President's Day, so the United States markets are closed. Thank you so much for joining me. It's going to be a short week as far as trading, but we've got quite a bit to go over. So, we were keeping an eye on the MMRI for the risk indicator, kept relatively stable despite everything going on with the Treasury, and I'll go into a little bit of that as well with what happened with inflation numbers. So, with our calendar for this week, it is short. The main things happening is that we are watching the Federal Open Market Committee meeting minutes for Wednesday. We'll be watching the initial jobless claims, manufacturing, and existing home sales, as well as crude oil on Thursday. So, we've got some earnings spotlights that we are watching, and this is via the symbols. If this is easier for you for the week, I'll bring these out each day that we're looking at. But Tuesday morning, we're really looking at Home Depot prior to open, as well as Walmart, kind of tell us what is going on in the retail side. So we'll go on from that. So I'd like to thank Seeking Alpha for this. But what they brought up is basically what happened Friday with the wholesale prices. They went up much more than expected in January. So with that PPI report coming in hot, it created quite a move in the market. So Treasury yields spiked above 4.3%, and that put a lot of pressure on stocks. So I was initially thinking I'm a bit surprised that they allowed that much of a margin between the numbers and what happened. I was expecting more inflation, of course, but that put a drop in it, was quite volatile as we expected toward the afternoon. So thank you to all of you that liked that. So we've got one other story as far as energy. So a couple of weeks back, we had a couple of other oil mergers going on between some of the larger companies. And now we're getting more consolidation because Diamondback and Endeavor Energy are merging. So they'll be another large one to watch. We've had ExxonMobil that took on Pioneer Natural, and then also Hesson Occidental. So we've got more consolidation in the oil industry right now. Price is suppressed. We'll see what happens with that. I think with the inflation, they're talking about lower demand, but in the long run, inflation will probably have its way with that as well. So on to the banking and economy. We've got retail sales are down, and there's a couple of reasons for that, which I'll go into here. We've got US regulators overhauling the US Treasury's market. This is going to be significant moving forward. Basically, what they're doing is instead of several markets, they're centralizing this. This will give them more control. And what that will do is this will allow them to kind of have another hand in these markets without having to either change rates or be doing the direct purchasing. Instead, they'll be regulating the larger purchasers of these by making the larger hedge funds and others that are purchasing the treasuries subject to more conditions. So on Friday, we did have treasury yields reach year-to-date highs as people start believing that rate cuts are not going to be as easy as they initially thought. So we've got even Jay Powell now saying the United States is on an unsustainable fiscal path. And what he's talking about is we are now higher in debt and can no longer service it meaningfully with the current GDP and production. That's a large problem going forward. There's only a couple of ways out of this, and it's either to sacrifice your economy or sacrifice your currency. So they're now coming to that quick corner to where they will have to choose. At the moment, it looks like they are sacrificing the economy. So this is the big news, and I have actually this is someone that doesn't even watch, I don't believe, but I've got Matt to thank for this because he had asked about the employee retention credit, and it made me realize most people are completely unaware of this because it's not at the person level, it's at a business level that the IRS has given out. And so the effects of this are not even being spoken about, and it could be potentially huge. And I'll explain why. So even the IRS is admitting that this is a complex credit, and this is by design. They make these credits complex so that it's a way to feed that upper end top without having to let people know exactly what they're doing with the taxpayer dollars. So these are taken directly from the sites that support these, and this encouraged a lot of basically marginally legal companies to come out and encourage taking the best advantage possible by businesses of this tax credits. What happened with this? So, this was supposed to be a tax relief for businesses that were affected by the pandemic, if you will. Can't say the name, they're going to hit me again with this. So, what this credit did was covered 50% of up to $10,000 in wages and health insurance, health benefits per employee. So it started to the 2020, but then in 2021 they extended it and expanded it. So they had higher credit rates and thresholds. So then businesses were making even more money. There were quite a few scams going on with this, but it was filtering out in a different way than what they intended. Businesses were not paying their employees anymore, they're instead pocketing the difference. So all they had to do was show that they had reduced revenue due to this issue that was going on around the world. So they had the option of either reducing the payroll tax or getting it directly in the deposits instead of paying in their deposits quarterly as they were required to do. They just kept the cash. So a lot of businesses did this. Some were legitimate, many of them were not. So this is a summary of how it worked. Each employee was worth up to 50% of $10,000, regardless of the size of the company, and this included tax exempt organizations. So, of course, nonprofit organizations started springing up right and left, showing that they had issues from this pandemic and that they couldn't get going. So, um, the other thing is if the employer had 100 or fewer employees, average in 2019, if they already existed, then the credit was based on the wages for all employees, whether those employees worked or not. So these businesses got these tax credits and they did not pay the employees if they didn't work. So instead, they took vacations to Europe, purchased higher luxury items, used them to purchase new cars, all kinds of areas that this went into spending. So the luxury spending now, after this credit is expiring, and that spending is not surprisingly going down. So that is the only way that this really filtered through was through all of the travel, business travel that exploded, and all of the luxury spending. So now this is timing out. We're in April. This timing is important because we've also got in March, we've got the banking short term lending program ending March 11th. We've got this is ending. Now, typical taxes are April 15th. However, corporate taxes come due, they can extend through October. So it's October 15th and then extend through next year. So these are the last of what we're seeing now, and the spending will drop precipitously as soon as this is completely ended. So, what happens as soon as they no longer need these employees? First, we've got the spending going down on one side, and we've got the second side of this, which is the increased unemployment. So now all of these companies no longer need these employees to get these credits. They're, of course, going to cut their costs and lay people off. So, National Labor Relations Board, this basically guides unions. So, companies are not just looking at firing individual employees, but they're also going after these unionized boards, talking about how they're basically too stringent with their rules. SpaceX is one of them going after them, Amazon, Trader Joe's, just to name a few. And a quote from here is saying that they're not just concerned about what's happening with, they call it collective bargaining, but that's union, with new and established, but also established unions. This can be retroactive. So basically, if they get this through what they want to, they can fire people in unions as well. So with this, I think Lufthansa is kind of behind the curve first off. Secondly, very poor time to ask this, but they're going on a strike this coming week. They're demanding a 12.5% pay increase as well as bonus. So we'll see how that works out for them. Germany's been having issues financially, so just in general, poor timing. We've got a company in France, Farvia, is cutting 10,000 jobs, talking about how they would like to compete in the EV transition. Then we've also got back in the United States, Toast announcing they're going to lay off 10%. So this is just the beginning. We are going to watch. The layoffs are going to be massive. As I said before, I expect them to hit unemployment above 20%, and we'll see how that goes. So we've got Bureau of Labor Statistics revising their unemployment numbers so it matches. We've got retail sales dropping, and over 25% of the jobs that they were claiming were created were government jobs. These are non producing jobs because they are paid with taxes. So I may go into that a little bit later, but what we really need to watch for true index of jobs is the aggregate hours worked. So it says what people are actually getting paid on for producing jobs. So we've got planned layoff announcements, more coming in. It's a website called Warn Tracker, and that talks about all of the jobs that we're looking at, basically coming forward. So we had BRICS, this in other news, calling out SWIFT is the payment system, saying that they're being biased towards the US dollar. And this basically because they're doing cross payments in their own currencies and they're looking at setting up their own systems. There's more competition coming out this direction. I don't think it's anything soon, but it's one more brick that they're building with, if you pardon the pun. So we've got Wendy's talking about dynamic pricing. This is very interesting to me. They're investing in electronic menu boards where they can do immediate repricing. So, aside from an inflation situation to where they would have to change prices rapidly, they're also talking about using artificial intelligence. And when they have low times, they can drop the prices, or if it's during, for instance, rush hour, they can increase their prices in order to increase their profit. So, very interesting and innovative business model they've got that they're going to be trying out here. So, just love an update that I want to bring out because it seems like we are losing books. So, when you lose your books and how things are written down, history can be rewritten and changed much more easily. I think that's appropriate to bring out on President's Day. So, I just wanted to bring up the bonus army. This is something that had happened back in the last Great Depression, 1932. It was a group of veterans that basically had gotten together on a protest over a bonus check that they were promised from the United States government, and the government had chosen not to pay out on this. So it's even in Wikipedia. I'm going to leave the link below if you would like to read about this, if you're not already aware of it. I think some of you already are. At any rate, we've got new implications, so history is about to rhyme. So, with that, if you would please like and subscribe if you're not already, if you're new to this channel. I hope that you enjoy the content, and until I see you again, my friends, stay free.